to this week's Money Metals podcast, helping gold and silver investors during these turbulent times. Now, this week's market wrap with commentary and analysis from Money Metals Exchange, the company named Best Overall Precious Metals Dealer by Investopedia.
Welcome to this week's Market Wrap podcast. I'm Mike Gleason. On the special midweek edition of the Money Metals podcast ahead of the Thanksgiving holiday, we'll cover the sudden setback in precious metals markets. Metals got hammered on Monday and Tuesday. Gold prices fell back below the $1,800 level to come in at $1,791 an ounce as of this Wednesday morning recording, down 3.3% so far for the week. The silver market shed nearly 5% and currently trades at $23.56 per ounce, down over $1 since last Friday's close. Platinum and palladium also got hit hard, with platinum down over $50 an ounce and palladium off nearly $200 an ounce since Friday. Interestingly, though, copper and most other commodities are holding up well. The price takedown that was focused on precious metals specifically may have been a knee-jerk reaction to news from the White House. On Monday, President Joe Biden announced he would renominate Jay Powell to another term at the helm of the Federal Reserve. Powell's policies are widely perceived on Wall Street to be good for the stock market. In any event, it means more of the same, assuming he gets confirmed by the Senate. Senator Elizabeth Warren and the socialist wing of the Democrat Party are bitter that Biden didn't opt to replace Powell. They had pushed for a nominee who would more openly pursue modern monetary theory and pay all the government's bills directly with newly created cash. With even more radical currency creation programs apparently being taken off the table for the time being, futures markets traders took the opportunity to pounce on the short side of precious metals contracts. Of course, most people who own physical gold and silver for the long run aren't going to second-guess their holdings because Powell is staying on at the Fed. The Powell-led Fed is currently responsible for fueling the worst inflation problem in 3 decades, and it's poised to get worse next year. The bullish case for precious metals doesn't assume hyperinflation or full-fledged socialism or some other extreme scenario. It assumes simply that the Fed will be unable or unwilling to stop stimulating. That means even if the central bank begins tapering its asset purchases, it won't ultimately raise interest rates as high as they need to go to get ahead of the inflation curve. Yes, it would appear a near certainty that negative real rates are here to stay under Chairman Powell. And let's not forget, he is the first Fed chairman to explicitly abandon the mandate to pursue price stability. Powell is openly pursuing higher inflation well above the Fed's long-standing target of 2% and doing nothing to tame it. The Fed under Powell has been purchasing so much government debt that it is now by far the largest holder of treasuries. Perhaps that is why he was renominated. He did his job as a great enabler of the Biden administration's borrowing and spending agenda. For an administration obsessed with undoing virtually every policy and position advanced by former President Donald Trump, the one Trump legacy being preserved and extended is Jerome Powell. It's actually quite predictable. The one thing both parties find broad agreement on, at least when they're in power, is monetary policy. Trump pushed the Fed to lower interest rates and extend stimulus programs and tapped Powell to serve that function. Now Powell is serving the same function for a new political constituency. The twist this time around is that the Fed is now expected to pursue a host of objectives that have nothing to do with its statutory dual mandate. Activists both outside of the Fed and within it are pushing Powell to roll out woke diversity and climate change initiatives, among other things. He has been capitulating to their demands. Under his watch, monetary policy is being politicized on multiple fronts. President Biden will have the opportunity to further tilt the Federal Reserve to Democrats' liking by filling 3 vacancies on the central bank's 7-member board of governors. In the meantime, the Federal Reserve Bank of St. Louis has a Thanksgiving message for American families. The St. Louis Fed put out a statement on Twitter touting the potential cost savings of substituting soy protein for turkey at Thanksgiving. That's right, the same people responsible for driving up Americans' food costs want us to believe that soy is a solution. Perhaps the Fed will try to convince us that food inflation really isn't so bad because we can always substitute vegetable-based proteins for our favorite meats, which will also supposedly stop the climate from changing because plants don't pass gas while grazing. But most people would find such substitutions to be a dietary downgrade not worth making. The reality is that Thanksgiving will be a lot more expensive this year. According to the American Farm Bureau Federation, turkey prices have increased by 24% over the past year, with the average overall cost of a Thanksgiving meal expected to be higher by 14%. All that said, there's still a lot to be thankful for. And here at Money Metals Exchange, we are especially thankful who have helped make us the top-ranked precious metals dealer in the United States. That is not a distinction we take for granted, not in the least. So thank you from the bottom of our hearts. Well, that will do it for this week. Be sure to check back next week for our next weekly Market Wrap podcast. Until then, this has been Mike Gleason with Money Metals Exchange. Thanks for listening, and happy Thanksgiving, everyone.
Thank you for joining us for this week's Money Metals podcast. Be sure to come back next week. And don't forget to subscribe to our podcast through iTunes. For answers to all of your questions, or to discreetly and securely buy or sell gold or silver coins, bars, and rounds, call 1-800-800-1865 or visit www.moneymetals.com. Our knowledgeable and no-pressure specialists are standing by to answer your call during business hours, Monday through Saturday. Or you can lock in your order online, 24 hours a day, 7 days a week. Again, visit us at www.moneymetals.com or call 1-800-800-1865.